that Southeast Asia has really bared the headwinds of the macroeconomic environment in a really good way. It's been very resilient. When you think about things like GDP and the stabilization there, we actually have seen that inflation has come down to from post-pandemic peaks, which you mentioned, and this environment is what's creating what you've said is around this opportunity that we have to really shift towards results and revenue. And so we've seen across the board, actually all sectors are showing growth. When we look at areas like e-commerce, it continues to be the biggest. It's growing 22%. When we look at travel, actually next year it's going to get to a place where it's back to the pre-pandemic levels, and it's growing above 50%. We see across the board when it comes to digital financial services, we've reached a new inflection point. Digital payments are now 50% of digital payments are all transactions are digital now, 50%. That means cash is no longer key. And so we see this real change in behavior across the board, across all sectors. So we're seeing a rise in both GMV across the board. We're seeing a rise also in revenue. That's what's important. The shift to monetization and profitability is key. And you'll see that across all sectors, we're seeing almost double what GMV was. And this is a shift in terms of mindset, in particular in the space.
And I'm glad you brought that up, because the mindset for the tech space before was growth at all costs. This is probably something you've heard over at Temasek Waihong, actually. But now you're starting to see the shift now to what they call the path to profitability. My question is, from an investor standpoint, shouldn't this have been the question raised for tech companies and tech companies with high potential? Profitability had to be front of mind first. And why do you think there's now been a shift from potential to perhaps what I might term a put up or shut up moment, at least for a lot of the tech companies in the region? Your thoughts, sir?
Yeah, so maybe I can contextualize that. If you think about the life cycle of digital businesses or businesses in general, you can start off with early stage. And early stage businesses, their responsibility, quite frankly, is to grow the market, educate the consumers, find product market fit, and develop positive unit economics. Going then into growth stage, those businesses have proven all that out, and their responsibility at that stage is to really sort of go from startup to scale up and grow into their fixed cost structure. And obviously getting to a later stage, more mature financial sustainability and EBITDA and cash flow growth. Now, I think with the historic and unprecedented low rate environment that we've seen in the last several years, what's happened is we've stretched that early stage mindset probably a little bit too long. And in the beginning of this segment, JP, you alluded to a notion of normalization. And I think some of the pain that we're going through right now, quite frankly, is a normalization of those stages. And we're going back to I guess, the way things should be. And I think the good news is, in my perspective, companies and entrepreneurs now realize that the best way to grow is not grow at all costs and stretch this early stage mentality across a scale, but quite frankly to transition as quickly as possible through early stage, growth stage, and towards more financial sustainability.